dealing desk of my trading platform. My name is Chris Osonane, and this is the InstaForex dealing desk, where I carry out my daily analysis of the market. Let me connect to the internet so that you'll be able to see the live analysis of the daily market trends. Let me just before continuing, as you can already see, this is the account number, the live trading account of InstaForex. I'm on the European server. That's why you can see it. You can see it here. And this is the Euro USD pair. The weekly. This is the weekly charts of the Euro USD. Let me pull out this information. This window here that gives the details of the account. You can see the InstaForexEuro.com. That is the server on which I'm trading. This is my account number, 5343148, and this is my these are my full names. So let me close that so that we can have a clear vision of all the tools and how the platform look like. As you can see, this is depressed. This is telling you that this is the weekly chart, and then this is the monthly chart. If you click it, it's going to bring out the monthly chart of the Euro USD, and then this is the weekly chart, and then this is the daily chart, and then this is the 4-hourly chart. 4-hourly chart. And then you can zoom so that you can have all the charts displayed at one time, in case you need to make reference to certain informations drawing from each chart at a point in time. And this is the monthly, this is the weekly, and this is the daily, and then this is the 4-hourly chart. So let me go back to the weekly. This is where I spend most of the time, because as a rule of thumb, you should not trade against the trend on the weekly charts or the daily charts, either the daily chart or the weekly chart, and also the monthly chart. Let me just quickly give a preview of what these charts are all about. As you can see, this is the monthly chart of the Euro USD, and what this means is that this is a candlestick chart. These are candlesticks. As you can see, they are just like candles. They are just like candles. I mean, the candles you light up to overcome darkness in a real life situation. You can see these are, we call it candlesticks. You see this, you can see it here. This one is depressed now. If I highlight it, you see the candlesticks there. Then this is the line chart, and then this is the bar chart. So if you click it, you see these ones will turn to bars, and then if you click this again, you see it has turned to candles, and then if you click this, it gives you just an ordinary line, as that is why it is called the line chart. But in trading, in technical analysis, the candlestick chart gives more details than the other ones, so it is always preferred to the bar charts and the line charts, because if you put a cursor on a candlestick, you see the informations it gives you. You see the pull-out information. You see the time, you see the open, you see the high, you see the low, you see the close, and then you see the volume. So other charts, the line chart and the bar chart does not give you those details the candlesticks gives you. So this helps us in technical analysis, because when you highlight a candlestick, you'll be able to draw the information that particular candlestick is giving you, and then you need that information to be able to complete your technical analysis. It depends on which of the chart you are taking your technical analysis. As you can see, this is the monthly chart. What this means is that each of these candles takes a month to complete forming. Each of these candles take a month to form. So this candle here is a month, this candle here is a month, this candle here is a month. So if you count from here, 1, 2, 3, that is 3 months. That is 3 months period. That is it. So each candle here represents a month, because this is the monthly chart. Then if you go over to the weekly chart, what this means is that each of these candles is a week. Each of these candles take a week to form. So if you are counting from here, 1, 2, 3, 4, that is 4 weeks. So these 4 candles take a period of a month these 4 candles take the period of a month to form. So each of these candles take a week. So that is what is the weekly chart is telling us. Each of these candles take a week to form. If you come to the daily chart, so what this means also is that each of these candles take a whole day, take 24 hours to finish forming. Each of these candles take 24 hours to finish forming. And then if you come over to the 4-hourly chart, then what this also means is each of these candles take an hour. Takes 4 hours to form. Each of these candles is 4 hours. And then if you can toggle this to make it a hourly chart. So if you come here, you see the H1, which is, okay, you can see it 1 hour. You can see that button is depressed, 1 hour. So what this means is each of these candles take an hour to form. So I'll switch back to the 4-hourly chart here. So this is the 4-hourly chart here, and then I'll switch back also to the weekly chart. So this is the weekly chart of the euro USD. So I am now trading on. I'm now trading the euro USD pair, and then as you can see, I just want to highlight on what the trend is. You can see I came over to this pair around mid-June. Yes, around June, so to say. So you can see this is 18th of June 2017, and then you can see May here, 21st of May 2017. You can see 23rd of April 2017. So I came to this pair around June 2017. So if you see this mark here, this calibration here, you see these marks here, this mark tells you this is 21st May 2017. This mark also tells you this is 18th June 2017. So if you trace this mark up here, trace this grid line, you can see this grid line. You trace this grid line up from 18th June, you see this is around the period I came over to the euro USD. So the trend, you can see the trend was steeply up. It's a steep uptrend. It's what we call a steep uptrend. And then you can see the period at which I came over. So it means that before coming over to the euro USD, this pair had actually reversed. You can see it came down. This is a period of consolidation. You can see this period here. It's a period of consolidation, and then it headed down, hit this support line here, hit this support line here, hit the support line here. This blue broken line is a support line, and then this one is the pivot point. Is also a support pivot point. S1 means support 1. So around this period here, this is a reversal indicator. This is a reversal. This is a head and shoulder pattern. You see, this is where this Euro USD actually reversed and headed up north in a steep uptrend. So this head and shoulder pattern here, where the reversal indicator manifested, was around, you can see the date here. You trace this. This is a trend line. This is a down trend line, or either you call it a down trend line or you call it a support trend line. This is a support trend line. This trend line is indicating that this pair had been in a downward course. You can see around this place here, this candle here, this candle closed above this red support trend line here. It closed above it, and then this black line here is my price projection. That is after I came over here. After I came over around June, I had to do this analysis here to be able to know around the period where this currency pair reversed and headed this direction. So you can see here is around it reversed. This is where this candlestick closed above this Tom de Mark support trend line here. It broke it and then came back to retest it and headed up in a steep uptrend. So this line is the price projection. This is the price projection. Also, it's a double price projection of how far this currency is going to travel up north. This is how far it will go at the time of this reversal here. So this reversal had actually taken place around February 2017. You can see the flow, the normal flow of price action. You see, so it formed a head and shoulder pattern here, broke this Tom de support trend line, and they also broke this Tom de Mark second support trend line and headed north in a steep uptrend. And how you know that this is a steep uptrend, you see this is the 20 exponential moving average. This green line here is an exponential moving average, and then this thinner one is the 8 exponential moving average. You can see the gap between these two lines after this reversal here. You see these two lines came together here at this point. These two lines came together at this point. That is an exhaustion. That is indicating an exhaustion of this downtrend, and also indicating the reversal too. So where these two lines crossed each other is a point of total exhaustion of this this previous downtrend here. It got exhausted around this. This is a congestion. You can see some kind of congestion here. It's congestion region. So it got exhausted and then turned the other way and headed up north. And then you can see the gap. The gap kept widening. You can see this gap kept widening. The meaning of this gap is this is a torrential uptrend. This uptrend is going up with force. There's a serious momentum upstairs. That is the meaning of this gap. See how wide it is. So it's a very torrential uptrend. And then you can also see MACD. MACD is also, there's also a gap between the two MACD signal lines telling you that there is serious momentum build up on this uptrend. So I came in here, came in around this June, came over to the Euro USD and met it with serious momentum upstairs. So this is a very good opportunity to make money, possibly totally recover. If I had come over, if I had monitored it around the time it reversed here, I would have been able to enjoy the ride upstairs. But I came in when this reversal had already taken place around February 2017. So at this point I came in, there was no opportunity for me to get in because the momentum upstairs was much. You know, it's just like trying to get into a fast moving train. You try to get into a fast moving train, you're going to have accidents. It's not easy to get into a fast moving train. You can't get into a fast moving train. So if though in the normal tradition of price flow, in an uptrend like this, the normal characteristics of price flow is that it will give you, the momentum will slow down at a point on this uptrend and gives you an opportunity to get in and to enjoy the remaining part of the ride. If you see, let me just give you an instance. Okay, you can see this was a downtrend. This was a downtrend, but at the points on this downtrend, these two exponential moving averages, that is this one you see wide open here, the 20 EMA and the 80 EMA, you can see a point where momentum slowed down here. Momentum slowed down, these two EMAs came together. So this is the normal characteristics price flow, normal characteristics of price flow. So at this point here, if it was a down trend and then momentum slowed down at this point in time, there's an opportunity to get in to enjoy the remaining down, to enjoy the remaining downtrend. You can see after its momentum slowed down here, it beginning to open up again here. You can see the gap between the 20 and the 80 EMA widening up to complete the remaining section of that downtrend. So if I was monitoring this currency pair around this period here, you can see this is 2016, this is August 2016. If I had been around here, I would have been able to momentum slow down actually here. It's just like you want to get into a train, you have to wait for it to get to the next railway terminus where it will stop before you can get in to complete the remaining journey. So this is like a bus stop or a terminus where this downtrend momentum slow down, if not possibly stopped completely, for you to get in and then enjoy the remaining part of the ride. But if you come here, you see how wide at the time I came in around June, this momentum was, the gap between the exponential moving averages was so wide. It never came together since then. You can see you can see the date here. Like I said, each of these candles, this is the weekly chart, each of these candles is a week. You can see the date of this one here. This is 25th of August 2017. So this next candle here does not have a mark at, but you can add up. This is a week. You add 7 days to 25. If you add 7 days to 25, that will bring you to 1st or 2nd of September 2017. Yes, because this candle takes a week to form. So after this grid line that gives us this date here, you add 7 days, and then this is another one that just started, and then you can see the dates that candle started from. You can see the pull out information there. You can see time 2017. You can see 2017 0903, which was yesterday at 0000 time, that is 12 midnight. So this is where we are now. This is where I am now. So you can see the momentum never slowed down from June. There was no opportunity for me to get in to enjoy the cruise on this remaining money making opportunity. And then so you can see this is a very serious trend, moving upwards. But if you want to really enjoy a trend, is when you catch it early enough, and then you enjoy the ride. And all this is profit. All this from here up is profit all through. So this is the weekly chart of the Euro USD. Okay, let me just briefly show you the one I was before, profiles. You can see the euro here is ticked, so that's to tell you that this is the chart of the euro. I was on the British pounds before. Let me just pull the information out. You can see this is the British pounds. This is the British pounds. You can see that this is what we call a consolidation. This thing is not just moving, it's just flat. You see the exhaustion here. It came and hit this M2 here, and there was no serious trend here. All this from this period, you can see from here, you see it came down. You see momentum downstairs. It came down, and then from October 2016, that was around the Brexit. That was around the Brexit. See, 9th of October 2016, November 2016. This was after the Brexit. You can see this currency never trended again. Just a flat, just moving horizontal. It's just horizontal. It's not steepy up. It's not steepy down. You can't make any money from this kind of. You can't make any money from this kind of horizontal trend. You can see even after my technical analysis, when this Tom the Mark red support trend line was broken here, this was the price projection of how far this uptrend was supposed to go. But you can see it's not even moving. You can see, look at the period, 9th of October 2016 through to January 2017, January, February 2017, April 2017. It will just maintain this flat, this flat horizontal. See 21st of May here. See June. This is at the point I had to abandon it. You see 18th of June 2017. See, it's not moving. So this is, as you can see, this is the British pounds. You can see it here, GBP USD weekly chart. You can see the total mess for this currency since after the Brexit. You compare this with, let me pull out the Euro USD profile again. You can see this British pound is marked, and I want to change it to the euro. You see the difference? See the way this one is just moving up, trending down, reversed, and then headed up north. You see, so and it's still the euro. You see, this is the euro. This is still the weekly chart. So I'm comparing the weekly chart of the Euro USD with the weekly chart of the British pounds, so that you can see the comparison. See the comparison. So this is not trending at all. This is not trending at all. You can't make any money from this kind of horizontal. This is what we call channel, consolidating, and it's still like that. You can see it's still like that till now. You can see we're in 2017. So this is the reason why I abandoned the British pounds and then came over to the euro, which had more prospects because it is trending very well. I'm back to the euro dollar, the Euro USD now. You can see this momentous, trend upstairs. So I'm waiting, and you can see this gap is wide, momentum, but already the momentum is slowing down. It has already hit the this is you can see this is weekly chart. If I convert it to the monthly chart now by clicking this, you can see that these are my pivot points. This is Okay, back to the weekly again. You can see the pivot point here, M3. This M3, this is the resistance pivot point here, and then this is the central pivot point. This green line is the central pivot point, and then this is below the central pivot point. You have a mid-level support pivot point, and then you have S1, which is the first support. So what these lines means is that when price is around anything above the central pivot point, this is the pivot, price keeps on oscillating. It oscillates this is like a central point where it oscillates above. When it's above the central pivot point, it is a sell area. This area is a sell area. You don't buy here, you can't buy here. This is a sell area. And then below the central pivot point is a buy area. This is a buy area. If you want to buy, you have to buy below the central pivot point, around here, around support. You buy at support. You can see now price came to support and reversed. Price always reverse at support areas, and then it will reverse again at resistance area. This is a resistance area now. Any area above the central pivot point, this is the central pivot point here. Any area above the central pivot point is a sell area. So price has, far gone into the sell area, that has advanced into the sell area. So when price is at this resistance trend line here, there's every tendency that when price hits a resistance pivot point, there's every indication that it will reverse from this point. This is a point of exhaustion. You can see this histogram is already reducing. The bars, you can see the bars are coming down, and then you can see the gap between the MACD trigger lines is already getting, is coming together. It's already getting close. So this, and then you can see a hammer here. This candlestick is what we call a hammer. This particular red candlestick here is you can see it's like a hammer you use to hit nail, to drive nail into wood. So this is an exhaustion point, and you can see my price projection has been fulfilled. At this, it was when I came in around June here, I had to do this analysis here to be able to do a price projection to know how far this uptrend is going to travel. And you can see that my price projection, Tom the mark, this black line here is my price projection. That is after this reversal here, this is how far this uptrend is going to go before it reverses and changes direction. So you can see that my both price projections have been fulfilled. Price has even a little past my price projection. So this is how far. These are profit taking levels. If I had had the opportunity of getting in here, these are profit taking levels. So price has a little gone past my price projection. So there's every tendency that when the price projection is fulfilled, price may turn around and head the other way down. So this is a fulfillment of price projection, and then this is a reversal indicator here. This hammer is a reversal indicator. M3 is also a point of reversal. That is a resistance trend line. It will be very difficult for this candle line. This candle line could not close above this M3 here. It could not close above it. So there's already a weakness going on here. If you switch over to the daily chart, you will appreciate what I'm talking about. You can see this is a hammer here at M3. So, and then you can see the central pivot point. The green line is the central pivot point, and I said anything above it is a sell area, and anything above it, below it, is a buy area. So I'm not looking to buy now, because already this uptrend, because you buy when the trend is up, and then you sell when the trend is down. So this trend is this uptrend, that this steep uptrend you see on the weekly chart here is already at the point of exhaustion. This is the point of exhaustion here. This is a reversal indicator here. You can see this is my This is a negative divergence forming here. You see a negative divergence between MACD and price action, and then you can see my price projection here has also been fulfilled. This black line here, this is a symmetric triangle. A symmetric triangle in an uptrend is bullish, so price came out from this congestion here and headed north to finish the remaining part of this uptrend. You can see I did a price projection here that if price comes out from this symmetric triangle, this is how far it will go. This is my price projection of how far it will go if price comes out from this symmetric triangle. And you can see it actually obeyed my prediction. It obeyed my prediction. It came out from this symmetric triangle and headed up, and you can see immediately it fulfilled this my price projection. Here you can see this is a reversal indicator. So price is telling you I'm turning around, I want to head south this time around, I'm tired of this uptrend. So this is a sign of exhaustion, especially as you can see a MACD negative divergence forming here, and then you see this is a doji. This candle pattern here is what we call a doji. A doji has been formed here. So, and then the color has also changed red, indicating that there's an exhaustion at this point. And you can see it is at a resistance pivot point. This is M3, this is R1, all above the central pivot point. So I'm looking to sell now. I'm waiting for this euro to finally reverse. It has not finally reversed, but it has already indicated that it wants to reverse. These are the reversal indicators. These are the reversal indicators here. So you can see the trigger lines of MACD have already come together to tell you that there's no more momentum upstairs. The momentum upstairs is getting exhausted. So I'm still waiting. You can see today's date. This is okay. Each of these candle takes 24 hours to form because we are on the daily chart. So this candle here was yesterday, which was 0309 at 2200 hours. So you can see this next candle for me here, which is today's candle. This is today's candle. You can see the date. You can see the pull out, the pop-up information on that candle pattern there, on that candlestick there, 2017-0904. At midnight, this candle started forming, and that is the information, the pop-up information you are seeing there. You see the open, the high, the low, the close, and then the volume that was traded, because each of these candles is a trading session. Each of these candles is a trading session. So I'll move back to the weekly chart. Each of these candles is a trading session. This one takes a week to form. On the daily charts, each of these candles takes a day to form. So this is my today's technical analysis, showing me that this momentous trend upstairs is very weak. Then preparing for reversal. I'm waiting for the reversal indicators to fully manifest before I enter into a sell position. I'm looking to sell here now. When this trend line, you can see this resistance trend line. This blue line here is the Tom DeMark resistance trend line. I'm waiting for the candlestick to close below this Tom DeMark resistance trend line. Two closes below this line is a full indicator that price has reversed and is heading south. So, but you can see that this uptrend, you can see these candlesticks are still abiding. You can see they still hug this blue Tom DeMark resistance trend line. You can see they are still obeying it. Candlesticks are still, you can see they are just hugging this resistance trend line here. So I am waiting for any candle to close below, 2 times below this resistance trend line here. I'm waiting for a trend line break. The trend line break is the ultimate flag off. Is the ultimate flag off among all the indicators. Is the most powerful. Is the most powerful. Is the most powerful signal. Very powerful signal. You can see this is a swing point here. This is a swing point. You have about 4 candles above this swing point here. You have 1, 2, 3, 4. Then you have 1, 2, 3, 4. So this is a magnitude 4 trend line. Magnitude 4 trend line. Very powerful trend line. So if these candles, if I have a close below it, 2 closes below this trend line here, this resistance trend line here, at above the central pivot point, at support area, sorry, at resistance area. These are resistance area. This below the, this is the central pivot point. Below the central pivot point are support areas, and above the central pivot point are resistance areas. So this is the resistance area now. So what I'm just waiting for is for any of these candles to close below this resistance trend line here, this Tom the Mark resistance trend line here. If I have two closes below this Tom the Mark resistance trend line, that is a flag off. That is the ultimate flag off for me to enter the markets and trade in the reverse direction. And that is the downtrend now. So, and you can see that if price, you can see the, this is the weekly resistance trend line here. You can see the weekly this blue line here is the weekly resistance trend line. Now you can see price action. You can see the candles are just hugging it up, telling you that it is not yet tired of this uptrend, but it's getting weak already. You can see it's coming close to it. It will come to a point here. Probably it's going to be around this point here, which is very close. It is going to close up below. Once you have a close or two closes below this resistance trend line here, that is a clear indicator that price has changed direction and is coming down. You can take a cue of what I'm explaining here. You can see this support trend line. This red one means this is a downtrend, and you can see how these two candles closed above this support trend line here. These two candles close above it. You can see it. This is close here. You see, this is a close also. So two closes are above this trend line indicated a change in direction, a change in direction. Price, you know, broke. That is telling you that it's tired of this downtrend. It was no longer hugging it. You see how these two candles closed above this trend line and headed up. So I'm also waiting for this trend, these candlesticks to close just like what happened here, that indicated a change in a reversal. So the reversal indicators are already forming here. If you switch over to the daily chart, you can see the congestion. You can see that momentum is, you can see the momentous uptrend here. You can see it's getting weak already. So, and you can see this price projection has been fulfilled. You can see how price, you know, closed. You can see this was a support trend line. This was a symmetric triangle. Price came out of it and headed for this little segment of the uptrend here. It's a finishing point, because you can see that my price projection has been fulfilled here, and then price is trying to indicate a reversal in the opposite direction. So you can see that if price eventually close below this resistance trend line and head south, it is going to come back again to test this support. It's going to come back. It's going to come back down. Though we don't know how long it will take, but it's going to be a beautiful ride. I'm waiting here. I'm getting set here not to get in. And when it comes down, it's going to come back down to test this support here, where it initially broke this support trend line and headed off. It will come back and test it. So it's a long distance of profit taking. In fact, it's a whopping. I'm waiting. It's a long ride, you know, of profit taking. These are profits coming down to test this support line. Is enough profit taking to even recover, and then rebounce back by the grace of God. So, Mr. Benga, I'm actually doing this video analysis to let you know what is going on, and then you can see that I have 3 sets of pivots on the weekly chart. On the weekly chart, you can see this is my yearly line 1, and then you can see my yearly line 2. Between these two yearly lines, I get the values to plot my yearly pivots on the weekly chart. I use the yearly pivot. I plot the yearly pivot point. These are the pivot points. These are the yearly pivot points. I plot the yearly pivot points on the weekly charts or the monthly charts, because you can also zoom it into the monthly chart. You can see it here. This is the yearly line 1 and yearly line 2, because I use 3 sets of pivots. Then on the daily chart I use the monthly pivot. You see the monthly line 1 and the monthly line 2. You can see this is a 03 August 2017 at 22:00 hours to this was yesterday, 0309 2017 at 22:00 hours. So this is a period of a month. So I plot these 2 lines here indicating a month period, and then within these 2 lines here I take the values of my open, high, low and close to plot my monthly pivot points on the daily chart. Then on the 4-hourly chart I plot the weekly pivot points. You can see. So I'm going to plot the two between these 2 lines. That is the weekly pivot points, which I normally plot on the daily chart. Yes, or on the 4-hourly chart, because I'm on the 4-hourly chart now, which I can also convert to the hourly chart. This is the hourly chart. So this is the, if I take it back to the 4-hourly chart, so I'm going to, if you see, this is a live trading session. You can see price movement here. You can see this is price here, this line, you can see these values are changing. You can see they are changing. Just watch this price here. You see it, these values are changing here. You can see it. So price is this is a live trading session. This is a live trading session. You can see the price movement. You can see the price movement. So if I want to plot my weekly pivots, if I want to plot my weekly pivot points, which I use that not until I'm about to get into a position, because already I plotted my monthly pivots here. I plotted this monthly pivot yesterday, and then okay, so this is the 4-hourly chart, and then you have the weekly line 1 here and the weekly line 2. Let me pull up the calendar so that you can see what I'm talking about. So you can see today is the 4th, and then the previous week was 28th. So between Monday 28th and today, which is 4th, is a period of 1 week. So I'm going to change this weekly line here to 28th, and I'm going to change this weekly line here to 4th. So that's what I'm about to do right now. So I right click on the dealing desk. I come to object list. So you can see the London Open here. So this is the weekly line 1 and weekly line 2. So these are the lines I want to adjust now. So last week Monday was 28th of August. So this is the weekly line 1, which I want to edit. So last week Monday was 28. So 28, click OK, and then weekly line 2, today is 4th, so today will now be 04. I have to change this to September, and this is 09, 06 to 06, because the London section opens at 9 a.m. Central African time. So we have to plot the pivot points. I have to plot the pivot points at least 3 hours to the London session, to the opening of the London session. So that is my weekly line 1 and line 2. It's a week apart. 28/08/2017, 06. That is 06 a.m. West African, Central African time, CAT, and then today is 04 09 06 00. That is CAT, Central African time. So I now want to take the the values of the open, high, low and close between in the last 1 week for me to be able to plot my weekly pivot points on this chart here. So and then so in order to do that now, so I have to open my text notes where I do take the values. This is, you can see, this is the weekly pivots, and then this is the monthly and the yearly pivots. These are the open, high, low and close. And then for the week under review, you have the weekly pivots here, you have the open, high, low and close. So this is the reason we use candlesticks, because it gives us more details of the traded volumes, open, high, low, close, because these other ones, this bar chart and this line chart, does not give us such detailed information. So the weekly pivots for the week starting that started yesterday, but though the trading actually started today, I want to take my weekly pivots. So you have seen the weekly pivots lines already. So then I'm taking the first candle for the opening session of this week's trading, starting from this morning. So this is the candle here. It's supposed to bring up some pop-up information about the open, high, low, close of this particular candle. But if it is not doing that, you can come here. You see the values will be displayed here. The moment I take the cursor back to this candle now, you'll just be looking there. You can see the information being displayed here of each of these candles. So if I place the candle here now, just look down to that portion of the screen. Look down, you see open, you see the high, you see the low, and then you see the close of this particular candle. Like as I've said earlier, each of this candle is a trading session. Okay, let me just kind of take this thing up a little to clear up this portion here so that you can see the information. So you can see if I place the cursor on this particular candle here, you see the open, high, low and close on that bottom of the screen towards the right hand side. So I want to take the open now, which is 1.19284, as you can see there, 1.19284. so that is the opening price for the week's trading starting today. So I am taking 1.9284, so I will edit it here, 19. Okay, let me capture it again, 19284. So 19284, 19284. So that is it there, 19284. Then I'm going to take the high. So between this weekly line 1 and this weekly line 2, where is the highest point price attained? The highest value price attained. Look, you can see here, just eyeball it. See this candle here. So this candle here, you are taking the high now. You are taking the high on this 20650, 20686. So this one is higher than this point here, is higher than this point here. So if you place the candle here, you place the cursor here, you can take the value downside there. You see H 1.20686. That is the highest point price attained in the past week, because we use information from the past week to plot our pivot points for the trading of this week. So we use the previous 1 week to project ahead of this week that we are now. So in the last week, the highest price of attained, the highest level price attained is 1.20686. 20686. So I'm editing this one here as 20686. I need to confirm that again. Okay, that's it there, 20686. Okay, 20686, 20686. So this one is higher than this one. So that is the highest point. Then the lowest portion, the lowest price attained between this past week here. This is the beginning of another week. You can see the candles forming here. So between the weekly line 1 and the weekly line 2, this is the lowest. You can see this is the lowest point here, this red candle here. You see the tail of the candle. So we're taking the tail, the lowest point of the tail. So if you place the cursor on this candle, then you take the value. You take the value here. I'm taking the value here now, and here you can see low. This one is high. This is the lowest price in the past week, and this is the closing price of the past week, and then this one is the open price of the past week. So if I place my cursor on this window here, you can see there I'm taking the lowest value, which is 18218. So I come here and edit that, 18218. You can see there. You can see there the lowest price of last week, 18218. So then I want to take the close now. This is the closing of last week trading. This is the candle here, a very smallish candle here. So if you put it here, you are going to see the closing price here. You see the closing price. But as a rule of thumb, instead of taking this candle as the closing price, we'll come and take this candle, come and take the close here, because the close of this, the open of this candle here is actually the close. It's actually the close of the past week. So we won't take our closing of the trade here. We are going to take our closing of the trade here. So you come to this candle, and then you take the closing price of this candle here. You take the closing price of this candle here. You take the closing price of the opening candle. See it here. So you see the closing. You see it here. Close price. You see. So just put your cursor here and take the close there. That is 19190. 19190. So I'm going to edit it here. So 19190. I want to cross check it. So 19190. So that's my closing price. So I'm going to save this information here on this my notes. This notebook here. So I have the values for the opening price, the highest price attained last week, the lowest price attained last week, and the closing price of last week. I'm going to use last week information to project into this week now, to be able to calculate my pivot point levels, and to know that helps me to take the decisions I need to take. So I now want to enter these values now into my pivot point calculator. So I have to pull up my pivot point calculator from here. So it's on the desktop. It's an Excel. It's a Microsoft Excel worksheet. Microsoft Excel worksheet. So this is my pivot point calculator, which I prepared myself. I invented this one myself. So you can see I want to plot these values here. This O here means the opening price. This high here means the highest price attained. This L here means the low price attained, and this C here means. So if I plot these values, if I enter these values into these portions here, this software will automatically help me to calculate my pivot points I'm going to use for the week's trading. So what I will do, I'll just copy and paste. So I'll just copy, Ctrl C, then I'll come here, I will do Ctrl V, then I'll move on to the next cell, which is this one now. I want to enter it, this high price here, I want to enter it into this portion here. So I will highlight this, I will do Ctrl C, then I'll come here, I will do Ctrl V, then I'll move to the next, I'll highlight, I'll do Ctrl C, I'll come here, I'll do Ctrl V, and then I'll move to the next cell, then I'll take the last one, then I'll do Ctrl C, and then I will do Ctrl V. So I can close this one now. So automatically this one gives me the pivot points for the week trading session. So let me start. These are the pivot points here. This is the central pivot point. This is M3, is resistance. It's a resistance level. This R1, another resistance level above the central pivot point, and then this is another resistance level. This is another resistance level. You can see this gray portion is the area I'm really interested in. This gray portion here. So you have S2 here, which is the last support. You have M1, which is a support level. Then you have S1, which is another support level below the central pivot point. And I've earlier explained that when price advances into this level, you'll be looking forward to sell, and when price goes down to these levels, you'll be looking forward to buy. So let me start from price already upstairs now. So let me start from M4. I wouldn't need arrow 2. I'll just take from M4 to M1. I'll just leave out S2, but those ones are extreme levels. So let me just take M4, between M4 and M1. So I want to plot my M4 now. So I come here, I click, I go to object list. You can see my M4 here. So I'll open my M4. I will enter. This is M4 here. This is the value. These are pivot points. See the value here, 21172. So I'm going to enter it here. 21172. So let me cross check that. M4 21170. It's 21172, not 21171. 21172. M4 21172. So the next one is arrow 1, which is that is resistance 1. That is 20511. So I went out here, 20511, and then cross check that. Arrow 1, 20511, 20511. So okay, that. The next one will be M3. M3. This is M3 here, 19938. So I went out here, 19938. That's it. 19938, 19938. So it's next one is the central pivot point. Central pivot point is 19365. I went out here, 19365. Let me compare that. 19365. 19365. So the next one is M2. Is M2 here. M2 is 18704. 18704. Let me cross check that. 18704. That's correct. Then the next one is M2. The next one is S1. So you have S1 here, 18043. 18043. Cross check that. 18043. 18043. That. Then the last one is M1. So I'll take my M1 now. That is 17470. So 17470. Let me cross check that. M1. That is M1. 17470. That's okay. So I succeeded in plotting my pivot points. This for the daily trading or for the daily analysis. You can see that this is where price is now. This is you can see the resistance levels, R1, M3 above the central pivot points, and then you can see the central pivot point. You can see M1, M2, and S1, which are support levels. So price is just a little below the central pivot point now. And we said the central pivot point is below the central pivot point is a buy area. So I would have been able to buy here now, but I would have still preferred, because already price is already very weak. In this uptrend, so I would prefer to wait for the reversal. I would prefer to wait for the reversal, because if you look at the weekly chart, price is the weekly chart is saying sell, because this is a sell above the central pivot point, is a sell area. So this is sell, but the sell signal has not fully manifested. So, but you know, in this analysis, the weekly chart is more powerful than the daily chart. The weekly chart supersedes the daily chart. So if the daily chart, okay, the daily chart is even still saying price around the central pivot point here, the central pivot point has no bias. If you see price hogging around this green line here, it has no bias. That means it is not a sell, it is not a buy. So this central pivot point here is a point of indecision. So the weekly chart is telling me that I should sell, but the daily chart is telling me hold on first, because price is around the central pivot point. I plotted all these points this morning: the yearly pivots, the monthly pivots, and then the weekly pivot. So, but since I'm waiting, the daily chart, the daily pivot is telling me indecision. The weekly chart is telling me to sell, because this is a sell area. But the sell signal has not fully manifested, because you can still see the gap between these two exponential moving averages, telling you that there's still momentum. So this is if you buy here is a risk. This is supposed to be a buy area. So if you buy here is a risk, because the tendency is that the moment you buy here, price can reverse and start coming down, and that will move against your position. So it's better to be patient for this reversal indicator to fully manifest. I'm waiting for price to break this resistance trend line here, break it to head south, so that I can enjoy and cruise on that ride down. So this is this. If I had gotten here, if I had gotten in earlier here, this would have been serious recovery for me. Serious recovery, because you can see this trend now is lasting for how many months? Since February 2017. You see it here. Since February, this euro USD reversed and headed north, and it has been on that uptrend since February 2016. You see, almost a whole year going, the trend is still up without providing an opportunity to get in. There's no slowing down momentum here for these exponential moving averages to come together like you have here, to get in to enjoy the remaining part of the downtrend before it reverses again and start going up. So no opportunity to get in. You can see it here, from here, 20 March 2017 till date. It's like trying to enter a fast moving train, and you know that can be disastrous. So this is an overview of what I do daily. This is an overview of what I do daily, and the analysis. So please, I'm just pleading, let's just be patient for this reversal indicator. You can see my price projection here has been fulfilled already. Price has hit this. This is how far price will go when it comes out from this symmetric triangle here. You can see this symmetric triangle here, and price actually obeyed my prediction. It came out of it and went ahead and fulfilled this price projection, and immediately it hit this targeted level here. It's formed this is a spinning top here. This is a spinning top. This candle pattern is an indication that price is about to turn around. Is spinning top here. It's an indicator for, but we still have to wait. I still have to wait for any of these candles will still be formed here in the coming days. I have to wait for any of these candles here to close, two closes below this support sorry, this is a resistance trend line. So I will need two closes below this blue resistance trend line here. This is this red one is a support trend line. This one is a resistance trend line. So price already at the resistance level. Price already at the resistance level where we are expecting a turnaround. You see, it could not close above M3, which is a resistance point. Price could not close above M3. So that is a sign of already showing sign of weakness. So, but this is the king of all the indicators. These trend lines, turn the mark trend lines, are very, very powerful. So the moment price violates, is hugging on it now. You can see it's just riding on the top of this. So the moment it violates this resistance, turn the mark resistance trend lines here, the moment price violates it, that is a whistle. That is a whistle that I can get in to as price travels down south. So it's a lot of work, it's a lot of efforts. So as you can see on the euro, and then as you can see, this is my live, is my name, my full name, my account number. These are my expert advisors. So, but I don't leave this window open. I normally close it so that I'll have enough space to do my technical analysis. Enough space to do my technical analysis. So as you can see, this is it, the Euro USD weekly chart, the daily chart, the 4-hourly chart, and then the monthly chart. You can even see the monthly chart that you can see this is a channel. Between these are resistance lines, and these are support lines. You can see between these two double lines here, price traveled in a channel. It consolidated for about 2 years. You see, this is 2015 to date. This currency was in a channel, consolidated for 2 years. So the euro dollar is just breaking out of that consolidation, and you can see the momentum upstairs, which is the momentum I'm telling you that didn't give opportunity to enter in. But you can see my price projection, that price is almost, but it's going to pull back here. It's going to, you can see the stochastics indicator here already closing. This is a sign of exhaustion here. So you can see this candle is already changing color. You can see these are momentum. This is momentum uptrend. You can see the candle, they are blue. But you can see this is downstairs. You can see the candle color is red. You can see the candle color red. These red colors means downtrend. Red colors mean downtrend, and then the blue candles means uptrend. You can see steep uptrend, but the color is already changing to red from the monthly charts, and so that is, you can see it has already turned red here. This is a point of exhaustion. So, and you can see it on the daily chart that is very clear here now that this steep uptrend here is coming to an end any moment from now. So just holding on and doing the daily analysis every day, watching the price from time to time, and then doing all the analysis I have to do. So thank you for your time. Thank you for your time. Thank you for your time.